Just wanted to put together this quick video on a trade I think which is quite interesting yesterday, which I think has a few lessons which I wanted to share. So the trade is around DGAZ. DGAZ is the inverse leveraged ETF on natural gas. And yesterday we had an interesting day with natural gas, and DGAZ was actually one of the stocks in play because it gapped up early in the morning on heavy volume, and that captured our attention. So what happened with DGAZ in the morning session, is that it quickly sold off in the mid-morning after natural gas prices rebounded a bit, and then it promptly did one of these V-turn bounces. And we happen to see here at this particular blue arrow what we call an early bird setup, and this is where you could have gotten long. You had plenty of time to get long here if you stopped below this message bar, and the trade worked out pretty well. So at this point here, hit 2R in terms of our risk to reward at this level. Following the 251 trailing stop approach, we would have layered our stops below this area here. All right, at this area here, and that would have kept us still in the trade until the close of the session. In fact, this is where you wanted to close it off. If you were going to close it off intraday, is where it closed here, and it closed for roughly, if we draw these levels, at around the 3R mark. So this is a good 3R trade. Now, if you didn't want to close out that trade, there was a few compelling reasons on why you might want to consider holding this type of trade overnight. Now, if we backtrack a bit and take a look at the bigger time frame chart, there's actually a few compelling cases to be made for holding this trade overnight. Now, maybe not on full size, but certainly holding that position or a portion of that position overnight. So, if we just look at our, let's say our 50-minute chart for a second, I'm just going to pull it up. What I tend to do is I tend to draw my Fibonacci extensions from the previous day low. So if we backtrack a bit here, I took the previous day's low and I draw it to the opening range high, and then I project the 127.2 and the 161.8 mark. Now you can see here that price on that session hit the 127.2 mark, and in fact that acted as resistance for a while until it broke through later on in the session and started climbing higher. And you can see we kind of have this stair-step higher approach, right? It's basically stair-stepping higher and higher. And what I like to see here is this kind of this idea of an impulse wave where you're pushing up, you're consolidating, and you're expecting another push to the upside. This is your classic ABC pattern, and you're really expecting here this to basically mirror this type of movement, and this is exactly what we got. So there's a very good opportunity here where again you can hold a portion of your trade and look to hold it overnight until the opening of the next session, or until one of these Fibonacci targets gets taken out. In this case here, you know, it opened up all the way up here at 2220, and so if we look at 2220, you know, we're talking right around this range here. That would have been a 7.5R return. All right, so instead of just having a 3R return, which we had here, which was a pretty easy trade, if we had held a portion of that position, we could have earned up to 7R or 7.5R on that, maybe on half a size or a third of the size. But these are the kind of trades you want to be looking for. Now, just to give it a little more context, even. Let's say you got out of this trade early, or you did not get into this early bird trade at this particular level here. This is again was probably the best place to get in was let's pull it up here. Let's go back to our 2-minute chart. The best place to get in was this area here. You had again numerous entry points at these levels there. Now, if you didn't get filled at these levels, or happen to not have been around this time, you can take a step back and look at the broader term chart, right? So let's take off some of these drawings now. And what we're seeing here, as I mentioned before, is you're seeing a series of higher lows and higher highs, and some nice consolidation here, right? This is very nice consolidation. And so what I usually do is, when I see these patterns and I'm in front of the screen, and I'm seeing a stock that hasn't broken down yet and still showing good strength, I'm looking for areas to buy based on pullbacks and consolidation. So this is an example here where you have, and these little blue arrows are indicating bars where you have consolidation or narrow range bars. And if I actually zoom down to, let's say, the 10-minute chart, let's go to our 10-minute chart here, you'll see a couple of really good instances where you had some really low risk entries here to get into this movement, right? So here's an example of one of these narrow range bars right there, where you could have really had a nice trade, right? So getting long at this level here with the expectation that I could have gone to these levels and up higher even. So here's a great bar on the 10-minute chart where you could have, again, got in at, let's say, the 2106 levels and put your stop below that around 20, let's just give it a little bit of slippage, 2107 levels, 2108, with your stop maybe at 20 and 98, so a 10-cent risk, looking for an upside of 70 cents. So again, another 7 risk to rewards for that particular setup. So you can hunt for that on the 10-minute chart. Even the 15-minute chart would have given the exact same setup, although with a little bit more risk. Again, this bar here that I'll highlight right now is a great narrow range bar, and that's a good bar to be buying on breakouts, right? So we can draw our lines in here. We would buy the break of 2104 at this level here. Just draw that back in there. At this level there. And then a break of that bar on this candle here would have gotten you in. Your stops in this case here would have been, looks like about, again, 2105, and you would have had about a 15-cent risk. So that move to 2117 would have been somewhere like a 3 or 4 hour target. Alright, so I hope that helps. So you can see that they're on setups like DGAZ, it often pays to look for additional entries. If you miss one, that doesn't mean the game is over. That just means the game has started. And there are many ways in which you can get in with a high risk to reward profile to make these types of setups play off. And number two, the other takeaway is, for great movers like DGAZ, you definitely want to be considering holding some of your position overnight to capture the extended moves.